How does your approach that you take in this course to stock valuations or bond valuations compare to what people might learn in a rudimentary college course on the subject or in some competing course?
Well, it's really radically different. Most courses that I'm aware of, anyway, are based on a theory of how securities should be priced. And then they work, discounted cash flow would be the most obvious one. We don't have any of that. We work on the basis of how they have been valued as opposed to the theory of how they should be valued, and then try to find in the history of the actual valuations some guide as to what changes in conditions change valuations. The course actually has two titles. So it's launched 2004 as a practical history of financial markets. And that was to differentiate it from these other courses, which really wouldn't have any financial history in it. We teach what happened to security prices during the Great Depression, during the Weimar Republic. We look a little bit at post-World War II. Japan actually is a very good indicator on the impact of monetary policy. You just don't get that on other courses. However, the word history on any course has always been seen as something that means it's not going to sell. But in the world we live in today, Dimitri, I think the penny is dropping. Reality is dawning that history and these huge geopolitical changes, to name just one, domestic political changes as well, these things are really, really important. And frankly, the other courses simply don't do that in the context of financial markets. I'm sure you can take a course on the history of the Great Depression, but we are very focused on how to make money in these different environments.